Hello everyone and welcome to my third video about some companies I find interesting. Why do I find them interesting? Because they are growing fast or they have enormous potential. But let's not waste any time and let's just get right into it. We will be talking about SowGood Inc. It's a candy company. I know, oh, it's so interesting. Candy company. So why should you even care? Well, it's been growing tremendously fast. They had a little bit of an issue during the end of 2024, which the stock just collapsed. But you know, that's what happens. You know, sometimes there's problems, but it seems like they will be going forward with this. They will go on. So the fact that it's continuously growing and the fact the only issue the stock went down was a temporary freezing issue with the products, and now they are about to fix it, you know, allegedly, hopefully. So what is SowGood Inc? It's a trailblazing US-based freeze-dried candy and snack manufacturer. And why should you care though? But generally, why should you care? The reason why you should care is that they have some interesting partnerships. They are partnerships with Circle K, Redstone Foods, Big Lots, and Target and Five Below. Sounds like threat almost, that last one, doesn't it? And they are continuously growing their presence in large retailers, and the fact that they're continuously growing their revenue, and the fact that the company stock has gone down so much. And I genuinely think if they fix the problem, then the company's really going to rally, in my opinion, obviously. And I really like it though. It seems fine to me. It's growing fast. It's high risk, high reward kind of thing. And one of the more popular products are Sweet Bites, which is 420 ounces. Nice. So be aware that, you know, these are high risk, high reward kind of things. Lastly, I'm going to say that it's technology. Why did I write this? Oh, here it is. And it managed to remove most of the moisture from the candy, making it last longer, but also remaining most of flavors and sugars and everything nice. What is freeze-dried candy though? Freeze-drying removes moisture from products, adding a crunch for increasing the snackability, and you know, it's all about the experience and the flavors and everything nice and dandy in it. And it apparently intensifies the flavor and it still tastes nice. There we are. From 2023 to September 2024, bear in mind it was in September to like November 2024, they had like an issue with like the production plant or like some products. Between 2023 till September 2024, which is 9 months, they grew their revenue from $16 million to $40 million. That was not me stuttering. They managed to increase the revenue over 200%. Which is incredible. But now let's go over to the other company. Anyway, this is FastNed, charging the future. It's got 2,000 chargers, 340 locations, and in 9 countries. This is in Europe, and mostly in Europe. So it charges electric cars. Especially, I think that's very important because everyone's like, oh, what about everyone needs an electric car, but very few people are mentioning, oh shit, we actually need to charge these bastards. Apparently, it can charge a car up in like 15 to 30 minutes. Still, you know, with a petrol car, it takes like 2 minutes, if that. But anyway, it's a step forward, you know. Instead of standing there half the day, now you only stand there for 30 minutes. Anyway, so it's apparently the chargers are powered by 100% renewable energy. Wow. And it's quite competitive. It's almost as fast as Tesla's superchargers, apparently. I did see a video about someone testing them, and apparently they were pretty good. Obviously, I don't have an electric car, so I wouldn't know. But I also looked at the growth, and they've been growing pretty decently these years. I look at the stats, the income. At the end of 2023, they had made 60 million, and 9 months later, 6 months later, in June 2024, they had increased to 72 million, which is well above 10% increase in just 6 months, which is very good. And let's look at the balance sheet. So by June 2024, they had $145 million in cash and cash equivalents, and the current total liabilities, here it is 30 million. So they can more than enough pay, according to this, what I'm reading here, which is a good thing. That hopefully means they don't have to dilute shareholders. I'm not a shareholder in this company. It's in Amsterdam or over the counter. So I'm not invested in this at the current moment. I don't know why I'm scratching my nose. No cocaine. And then for the third company, it's FlyWire Corp. I looked at my notes and I apparently found a company called FlyWire Corporation. It's apparently an international bank fintech company that assists international students and hospitals and traveling companies with, well, travelers doing international business and trade. And it apparently is also working with a massive bank in India called Indian State Bank. And apparently they are operating in 240 countries and territories, utilizing 140 currencies. And it's a digital bank because everyone is just cash is trash, isn't that what they say? Because, you know, it's a lot more enjoyable like having it convenient rather than having it private, you know. What are you trying to hide? Anyway, so let's just look at some interesting facts why I find this company interesting. First of all, when I look at the overview, its 52-week high was $31. It's currently trading at $18 per share. So it seems interesting, but it's continuously growing though. In 2023, they made $403 million. By 9 months later, they had increased that to $475 million, which is over 15%. That's almost 20% increase in revenue in 9 months, which is very nice. Let's look at other info. They did increase the share count by that time by 14%. The gross margin is 63%. Their operating margin is almost positive at minus 2.5%. And the profit margins are at plus 4.2%. I know, a lot of numbers. And the balance sheet, they currently have $565 million in cash equivalents and combined as $681 million in cash and short-term investments combined, which is cash and bonds and things of that nature. And their current liabilities are at $375 million for this year, or like in 2024. And the total liabilities is $336 million. So they can more than enough pay like every liability and still have over $100 million, which is amazing. And let's look at, they have net income of $20 million by 30th September 2024. Let's see if they have some free cash flow. Oh my, they have $191 million in free cash flow. Wonderful. And let's look at some statistics. The market cap is higher than the enterprise value, which is nice. And then I looked at the institutional holders of this. The largest institutional owner is Vanguard Group, holding 12 million shares at roughly, it seems like $229 million, which is pocket change for these Vanguard people, obviously, but like. And then in third place, it's BlackRock, which sounds like something else, at 9 million shares, and they have been increasing their share count by 2.7%, which is 237,000 shares. And by the way, Vanguard increased their share count by 780,000 shares, which is a 6.9% increase. And let's see what other companies have increasing and decreasing. This company seems like a very good opportunity, in my opinion. Obviously, do your own research, but all these companies are, in my opinion, every video I make on this channel are of companies that I think will provide a value to you by the fact that they are high growth, but that means also high risk. But I also think they are cheap, a lot of them. Cheap in the sense of if you compare them to the 52-week high, which is not the most efficient, obviously, but a lot of these companies aren't profitable yet, so you have to place things more in your favor. And then if you can find the companies that are growing fast, that have had a little correction, you know, and if you have a long time preference, then why not? Basically, only invest in things you know what they do and know how they can benefit you. And you have to, like yesterday, a couple of days ago, I invested in a company called LifeWorld. Tremendous company, by the way. But the fact that literally the day after, the CEO was resigning and the company went down 10%. Like that's funny. I find that quite funny. But like I'm a long-term investor, so I'm just gonna wait. The health sector, but the exoskeletons, based upon what I read, it's like the CAGR, or like the every year growth of the sector is between 16 and 33%, which is like basically, I think it's almost the same as AI, but no one, which is interesting. By the way, that's another company. Like I'm personally invested in a company called LifeWard, and I'm bullish on it, even though the CEO is resigning. I don't know if it's due to a certain experiment with that happened these last 4 years, you know, during the entire world, or if it's something else. I don't know. I can't make a comment on that. Please do your own research. Have fun. I hope you've enjoyed. Take care. Peace.